Welcome to the M2I Alternative Investments Chat, where we demystify the world of alternative investments and financing for entrepreneurs and investors alike. With these discussions, we hope you're more empowered to unlock new opportunities in your business or portfolio.
Welcome back. In today's episode, we're going to be talking about the challenges that advisors face in the alternative investment world. So the role of the financial advisor is to provide outstanding client service, and then they incorporate traditional assets and now even more than ever, those alternative asset classes. Advisors are turning to the alts to diversify portfolios for their clients and those enhanced returns that come along with them. It's critical to have a solid understanding of these investments, especially the strategies for them, because failing to provide these types of investments to their clients can really put them in the dust. Mm-hmm. You might seek somebody else who will do that for you if you've got an advisor who wants to stick straight to stocks and bonds. So we want to just discuss that a little bit more today. So with that being said, what do you think are the biggest challenges for advisors in this alternative investment world?
Sure. I think talking with clients directly, education can be a huge hurdle. A lot of new investors are hearing about alternative investments, and although alternative investments aren't as complicated as they may seem, for example, real estate is an example of an alternative investment. Everybody knows about real estate, but when you hear alternative investment, that can get a little scary. Oh, what is that? It's kind of like the hot new trendy thing right now in the investing world. So that can be a hurdle that advisors have to get over with their clients. Same thing is also trying to explain the rules and regulations behind each alternative investment. Every single alternative investment is different from one another in terms of how they operate and work. So that can be a challenge. And then later on, we'll be talking about some misconceptions that investors have about alts that can really deter them from investing or wanting to invest.
Awesome. Can't wait to talk about that. So why is having knowledge of these alternative investments like private equity, hedge funds, real estate, why is that even important? Does it even matter?
Well, we've all heard the phrase knowledge is power, and that definitely applies here as well. If you have the knowledge to be able to pass that along to your clients, that helps build the trust between the client and the advisor. Additionally, in order to be successful in helping your client invest, you have to know, again, how every alt works. I just mentioned that every alt is different, so you have to have that knowledge in order to be successful and comply with rules and regulations.
And I'm sure there's lots of rules and regulations. We'll probably talk about those in a later episode. So you said we're going to talk about those misconceptions that investors sometimes have with those alternative investments. How can advisors address them? What are some of them? We've talked previously about being illiquid and things of that nature. Can you kind of expand on those?
Yeah, definitely. So first I want to address some of the risks, and then we can talk about how advisors can mitigate those things. So first off, risk perception. Alts are considered or typically perceived as being riskier than traditional investments. However, that risk varies widely among alternatives. Just how risk varies widely among all investments, same thing applies here. And also, some may be able to offer even lower volatility and better diversification to your overall portfolio. So even though one alt investment might be more quote unquote risky, in the grand scheme of things, it can actually help keep your portfolio safe.
That's good for the investors because the last thing they want to do is lose their money.
Of course, yeah, it's your money, you want to keep it. So one of the things that advisors can do to help mitigate this is advise their client on the types of risks that are involved with the investments that they're making, and making sure that they know that risk management is crucial regardless of asset class. Just like I said, if you are investing in stocks, if you're investing in bonds, there's risk associated with that as well. It's never a guarantee. We like to say that a lot. It's never a guarantee. Investing, there's a way to do it as smart as you can, but at the end of the day, there's never that guarantee that you're going to get that money back or you're going to get more money from that investment. Next off, you addressed the liquidity concerns, so I'll kind of touch on that a little bit more. We discussed it a bit in our last episode, but alts are typically considered illiquid. However, there's a huge trade-off between liquidity and potential returns. This is why you see higher returns in alts overall typically. Sometimes you're seeing that 9, 10, 12, 13% return, and that's because it is an asset that is less liquid, so you're getting that money back because you're willing to put your money somewhere where it's not going to move for a little while.
Meaning that most of the time in alts, they want your money for a little bit longer of time,
Yes,
correct?
yes. And if we think about some of these alts, like fine art, wine, we discussed this in our last podcast. It can be difficult to find a buyer for those assets, which can contribute to the illiquidity. So it's not like stock where you can get rid of it at any time,
Walk in the morning in your pajamas.
Exactly, yeah. So you have to find the correct buyer. So sometimes that can be perceived as, a risk or something that is unfavorable. So I guess the best thing that advisors can do is address with their client their liquidity needs. Every investor is different. There are going to be some investors that really need their investments to be more liquid than others. So addressing that with your client and understanding what they need and want from their portfolio is crucial.
And that makes sense if you have an extra $10,000, $50,000 lying around. If you do, I'll take some. But and you don't really need it, you can put it into these alternative investments and
Sure.
get those higher returns because you have the funds to still function.
Right.
I think that's really actually kind of cool.
Yeah, and if you don't have to worry about it, it can be anywhere. It could be in the bank or it could be invested where you're actually making money back.
Have your money make money.
Exactly. And the last thing that I want to talk about is complexity. Alts often have these complex strategies and structures which can be intimidating to clients. Most people kind of understand how a stock or a bond works. Alts are a little bit different and they require some extra investigating and due diligence in order to really understand them. So advisors should simplify explanations as best they can while still keeping their client in the know, giving them the information that they need, and tying their investment into real life examples. Again, we talked about real estate as being an alternative investment. That's something we're familiar with. If you can explain the alternative investment to your client in a way that they can understand, that'll go really far.
I think that's great advice. And again, we talked about this last time. Alternative does not necessarily mean new. We've mentioned real estate a few times. Real estate is one of the oldest investments on the market there. So, but being able to kind of dumb it down for your investor makes it much easier to understand. I know
Definitely.
it definitely does for me as well. So, what role do alternative investments play in differentiating the advisory firm and like a competitive market?
Yeah, so there's a few things here. Something that we already mentioned, but I want to expand on diversification. It's not only great for the client's portfolio, it's great for the advisory firm. So you are able to offer a more diversified investment approach to your client that can attract new clients to come to you. We've said this before. If you're not talking about alts to your client, somebody else is. This is something that is very popular right now, or gaining more popularity, is being talked about a lot. You need to be taking that step with your client to be educating them about alts and see if it's the right fit for them. Additionally, access to unique opportunities, stocks and bonds, we know them, we love them, but with
People don't love them.
with some alternative investments, there's an opportunity to do something that could be perceived as more exciting. Venture capital, private equity, those sorts of things can be different for that investor. It could be more attractive to them because it's something they maybe have not done before. And that can also attract clients who are seeking those higher potential returns that we mentioned earlier as well.
Yeah, how cool would it be to say you helped start a company?
Sure.
Your finances help fund this really awesome product that now is in every household. I
Exactly.
think that would be really cool.
Yeah, and if you can find something that you're passionate about, you are making money while also helping other people and bringing potentially a product. If we're talking about, venture capital, potentially bringing a product that you're passionate about to other people, it's kind of a win-win.
I love it.
Also, customization. That's huge. That kind of goes into the diversification of the portfolio, but customizing the portfolio to really meet each individual client's needs. If you're able to do that with alts by supplementing them into their portfolio, that's a huge benefit and definitely something that can be attractive to new clients. And then long-term performance. Historically, certain alternative investments have exhibited strong long-term performance characteristics outside of the typical 60/40 portfolio. So incorporating alternatives into the client portfolios, you're able to show a higher performance, which again is attractive to clients.
And I want my money making money.
Exactly. Erica, I'm wondering if you could expand on what criteria advisors should use when they're selecting those alternative investments.
Yeah, we kind of touched on this earlier about customization, but you want to talk to your clients first. Every client is different, every investor is different. What they have to invest is different. So you want to make sure that there is suitability for that client. It's not a one size fits all. You definitely need to explain as an advisor to your investor the risks, all the things that we talked about earlier, but that's definitely one you want to make sure that fits what they want to invest in. If you like cars, you want to invest in cars.
Sure.
You don't like wine, don't invest in wine. Like you want to make sure it fits within the client's suitability.
Sure.
You want to check their track records, the investment track record. You just touched on it a second ago, talking about longevity of an investment. There are things such as due diligence. You want to make sure to investigate the company in which you're investing. Not every investment out on the market is a good one.
Yeah.
There are products that tank. There are things that don't come to fruition. So you want to ensure as an advisor that you are talking to your client and explaining the transparency and the due diligence of the actual investment to ensure that it fits within their profile,
Yeah.
their
And
portfolio.
I think you and I can both speak to this. We've seen some sketchy investments out there.
Absolutely.
We've seen some sketchy investments in the alternative space. We've talked about how sometimes there's these Facebook ads that pop up for alts. You're going to this website. It looks like it was built by a kindergartner.
Says invest and you don't know how much for how long and what you're getting back in return.
Exactly.
They just want your money.
Exactly. So that is the duty of an advisor, is to investigate those things and make sure, is this legit? Have they done this before?
Exactly.
Have they had success with other investors, et cetera?
And again, we talked about you want to make sure that as an advisor, you have a fiduciary responsibility to your client. You cannot steer them in a way to invest our money in something that might not hit. Now, that doesn't mean that every investment that you suggest is going to, like we said, there is no guarantee. There's no set amount that you're going to get. There is risk always involved, but you also don't want to steer them down a really, really shady path.
Yeah.
And then lastly, we do want to talk about regulatory and compliance considerations. So within the SEC, every single one of these types of investments have different filings. So as an advisor, you want to make sure that you are very up to date as all of these regulations change often. So you want to make sure that you are providing your investor or your client with all of those up to date compliance orders to make sure that their investment is a good one.
Yeah, absolutely. I think I wanted to expand. Your first point was so good, and I think there's just one more, kind of thing I want to tack onto that. When we're talking about client suitability, like you said, every client is different. How long a client wants to invest, what their risk tolerance is, what their financial situation is, how much they're able to invest. All of these things are factors that an advisor needs to examine. You might have someone that's willing to give $10,000. You might have someone that's willing to invest $1 million. And you might have someone who's, I could give it away for 10 years and watch it grow and I don't need to touch it and that's fine by me. There might be someone who says, I can only do 5. So the advisor's job is to really assess that situation to find the right fit for their client.
Absolutely. At the end of the day, we said this last time, it's the investor's money on the line.
Yeah.
Thanks for joining us. Stay tuned for more insights in our next episode. And don't forget to subscribe to continue the journey with M2I. See you next time.
The content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.